Welcome to JRBT Tax Talks. I'm Connie Berry, head of the tax department here at JRBT.
And I'm Bob Woodard, managing partner of JRBT.
We are here to talk about the One Big Beautiful Bill. Man, that's a mouthful. The law was signed into effect July 4th, 2025. The law represents a comprehensive overview of U.S. tax policy, extending and amending provisions of the Tax Cuts and Jobs Act, introducing new deductions and credits, as well as phasing out several green energy initiatives, making procedural changes to the IRS programs and enforcement. This is a broad overview of the topics. This video cannot be construed as advice under Circular 230. Please consult your tax advisor for your individual tax situation.
Connie, we're going to start off today talking about some of the individual provisions where this bill modified or expanded the current tax law that we currently have. And we'll start off with the tax brackets. Those have largely now been made permanent and will stay intact between 10% and 37%. Again, that just extends what we had previously. The larger standard deduction was set to expire, but however, now this bill makes it permanent. So we'll still continue with that larger standard deduction, which will be inflation adjusted, and it will increase as years go on. Next, the personal exemption had been temporarily repealed with the prior tax law, and now it has been made permanent that it is 100% eliminated. However, we do have a new tax deduction for senior taxpayers, 65 and above. Though that is $6,000 per person. So we will have those higher deductions for over 65 taxpayers. The next thing that was really modified was the state and local tax deduction, which is one of our itemized deductions. That had been limited to $10,000 per taxpayer and now has been expanded to $40,000 beginning in 2025. There are some income limitations on that, could phase it out, but generally we get that going from $10,000 to $40,000. In addition, we have a new for itemized deductions, we have a new phase out, which basically once we hit the 37% tax bracket, we will begin phasing out the itemized deductions that were allowed, which will in effect reduce our deduction once taxpayers hit that 37% tax bracket. The next thing is a credit. The child and tax credit has now been permanently increased to $2,200 per child, of which $1,400 could be refundable. So that, again, doesn't really change the law. It just makes that permanent. It was going to expire, and now that is a permanent credit, which is a great thing for taxpayers. And lastly, the thing that really got some of the most attention in this law was the estate tax. The estate tax was set to go back to $5 million per person. So anyone with an estate over $5 million was going to go back to paying estate tax, and that now has been revised and extended to $15 million. So beginning in 2025, we have a $15 million estate tax deduction or exemption, and thereby then will be permanently there instead of sunsetting. So that's good news for taxpayers.
Those are all good things, but here are a few of the much awaited provisions. We have tip income deduction up to $25,000 without itemizing, and so that phases out at $150,000 AGI for single filers effective through 2028. In addition, we have the overtime pay deduction up to $12,500, which phases out at $100,000 for single filers and $200,000 for joint filers, and that is through 2028 as well. Both the tip income deduction and overtime pay deductions will be above the line deductions for non-itemizing taxpayers. There's a lot of provisions in there that we don't know about, and so those will continue to unravel as we get into the law, but the law is still being written at this time and probably will be for quite a while now. So as soon as we know more, we'll deliver more information.
Right.
Another provision is the auto loan interest deduction for up to $10,000. That deduction itself is for the will be available after 2024 with final assembly in the U.S. And so that's effective from 2025 to 2028. I imagine we'll see a lot of that being rolled out in conjunction with, the appropriate vents. And so we'll know more as time goes on as well. And one of the items that was highly touted over the last year was the new Trump accounts, which will be tax advantage savings accounts, which will be seeded with $1,000 from the U.S. government. Yes, I said the U.S. government, which will be amazing. I mean, for all those newborns.
Yeah, and I think one of the keys there is all these provisions are temporary for now, and we'll have to wait to see what Congress does next on all those things. So let's jump into a couple other changes that there are coming up. And the first one is for charitable deductions. Generally, to be able to take your charitable contributions, you have to itemize and get over that standard deduction that I talked about earlier. But starting in 2026, not 25, but in 26, you would be able, a married couple would be able to deduct up to $2,000 without itemizing of charitable contributions. So that'll be a good thing. In addition, there will be limits to the charitable contributions with a kind of a floor, which will kind of reduce slightly the amount of charitable contributions that we're allowed to deduct beginning in 26 and going forward. And next, we'll talk about some depreciation updates. These are really very, very much anticipated by our business community. But our depreciation, the Section 179 deduction cap has gone to $2.5 million, which is really great. So we can expense up to $2.5 million of eligible assets. In addition, bonus depreciation was scheduled to go to 40% for 2025, but now it has gone to 100% of eligible assets that are now going to be able to take 100% bonus depreciation instead of that 40% in 25. And right now that is going to be continued in the future also. In addition to that bonus depreciation, one of the new provisions is that now we can take potentially some non-residential qualified production property, i.e. there are some commercial property, real property that we may now be able to take bonus depreciation on, which in the past we were not allowed to do. It was only personal property. So that's very big. If you have some real property that you've placed in service this year, you definitely want to talk to your tax advisor.
Thank you, Bob. So some of the other provisions that we've seen are related to business tax provisions. The QBI deduction for 199A is staying at 20%. That is huge. And then one other item that we've seen is the 1099 miscellaneous and NECs. The filing threshold increased from $600 to $2,000 on payments that are made after January 1st, 2026. Another huge win for business.
So 25 will still be the $600 limit, but 26 will begin the $2,000 limit.
That's correct.
That's a great win for taxpayers.
There are some other provisions, one being energy credits. A lot of these have been greatly reduced or rolled back, and so most of these personal credits have been eliminated. That'll be, loss for a lot of taxpayers. But there are a lot of international tax provisions that are wins, and so anybody who has international, please consult your tax advisor.
Yeah. And that really, comes to, as we wrap up this video, planning. How do I deal with this tax act? And I think the number one thing is you need to talk to your tax advisor as soon as possible. Each one of us is going to have a different answer to that. Each taxpayer is going to be a different win and a different loss, different amounts. And so it's really imperative that we talk about with your tax advisor. You talk about maybe your state and local taxes. How do we deduct our property taxes here in Texas? How do we look at child credits and what are those going to do? How do I look at my QBI, my depreciation? All these things we've talked about today. Each one of those are going to affect some of the taxpayers and not affect others. And so I think it's really imperative that you'd rather sooner than later talk to that tax advisor. So I would highly encourage you to pick up the phone or send an email to us here at JRBT to help figure out how does this bill affect me and my taxes for my family. And we love to do that. and look forward to talking to you very, very soon. Okay, thank you.